Anurag Singh also joins us on the show. He's, of course, the managing partner at AnsidCapital. Anurag, hi, season's greetings to you. First up, wishing to you and everyone there a very happy Diwali. But it doesn't look like the mood in India, at least as far as the equity market is concerned, is cheering enough because of the weakness that we have seen. What's your sense? A deep correction or a shallow one?
Anisha, good morning, and wish you, Nikunj, Aisha, the entire team, which is a phenomenal team. I'm, a very happy Diwali. I'm so honored to be here. Every time I join this channel. Okay, I mean, I heard your conversation, and let me just add two bits from my side. Before we jump to call it a bear market, I mean, let's just put this in context. In last 1 year, small cap, even now, has given like 43% returns. Same around with mid caps. Nifty Junior is about 60% up. Nifty is around 25% up. Now, it all depends on what expectations people jumped with the market. I mean, those who expect these kind of returns, I hope they know what they're doing. But I think the long-term SIP investors never expected these returns, right? So even if we are 5, 7, 10% from the top, I think we still are in a very, very bullish zone, right? So that's point number one. Anisha, the second point is if somebody is feeling that they are, way below, they've taken a 20, 30% correction, the only indication of, that points to the direction that their portfolio allocation is misallocated. We all get, distracted by the past 3-year, 5-year returns. I think investors should relook at their portfolio and see that at least 50% is in the large caps, and then about 30 is in mid and small, and about 20 is in bond or fixed income or PPF or a combination of that. If that is not the case, then you will face, you will not feel a 10% correction. You will actually feel a 25% correction. Finally, the ultimate truth in the market is mean reversion. So when I talked about these numbers like 30, 40, 60, 25, 30% returns, markets will revert to mean. The mean is about 12 to 14%. It's a disputed discussion, whether mid caps, small caps outperform. My sense is Nifty 500 also is around the same 12 to 14% returns long term. Ultimately, markets will revert to that. So I think we should all need to take a chill pill, relax, and keep our expectations around that.
Anurag, hi, morning. Happy Diwali from all of us once again. So wondering what's the shopping list looking like? Are you already buying the decline here in India?
So, okay, now that's a tough question. So I've been a seller, Aisha, and okay, guilty as charged as FIs have been selling. The only place I am invested is in private sector banks. I think that stays a long-term story. So I think you can, and that's the only place where I find value. Outside of that, healthcare is a space that we like, but I think much of the healthcare is being played through the private equity route. But regardless, even the listed space, I think healthcare continues to be a space as the economy grows. The top section of the society, which is top 10, 15% of India, will always be short of healthcare, right? So that's another space. Other than that, I don't find compelling reasons to buy right now, but I'm sure the time will come when the market is extremely fearful. That's the time to really shop aggressively. Other than that, we just stay put.
Okay. So Anurag, what is your trade for the year? Right now, it could be private sector banks because you want to hide into something which in the near terms offers safety and valuation comfort. But in general, what could be a 1-year trade if you are allowed to just punch in one trade?
Nikunj, I would still say private sector banks. I think I don't find any other space where, so look, again, it depends on the perspective you have. I hate to see 30 to 40% corrections, and so I really don't want to enter spaces which are, where the valuations really, look, I think Unilever results clearly justify that you can't, a company which is growing 2% top line, you can't be giving 30, 40, 50 multiples. Here is the ultimate truth. The nominal GDP of India is growing at 10%. Okay, for the past 10 years, average from 2014 to 24, nominal GDP is 10%. So there is no way that the companies can grow 20%. It will be around 12 to 14. So we like private sector banks. That's the only big story, and it indirectly plays into the larger economy, and that's a much safer story as well. I understand the little risk there is that FIIs hold larger positions. They will at some point they will sell, but then I don't think the risk reward is still it still looks very comfortable to me. Add to that little bit of healthcare. Other stories, I mean the stories are there, but they are very very pricey. I mean you can burn your fingers there. And by the way, Nikunj, let me just add, I'm saying this because, we have the flexibility to invest capital across, right? Had my capital been tied only in India, I would have looked at other places. But currently, I think these are the only two places I have, Nikunj.
Right, Anurag, good to have you on the show, and we'll see you post Diwali.